Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 23rd of Feb. Now, just coming out of the North American session, or just coming up to the end of the trade day, US equities, well, Dow Jones was survived, but the tech stocks all got hammered down roughly 2.5%, with the S&P down only 0.7. But you'd expect this. This is like a risk-off profile. You'd expect the dollar block to be falling and the dollar pairs to be rallying. And that's not how it's happening. So just had a few questions about what's going on. Where's the movement coming from? Well, it's a culmination of a few days of data, and there's when you look at the sort of general news here coming out of the US, there's not much coming out. We've been waiting for this stimulus package. It hasn't arrived. Well, there's Donald. He's back in the news. And then you've got just a little sort of few bits and bobs here around COVID and what the Fed are going to be looking at doing, all this sort of stuff. So no real clear direction. But what has been clear, right, is the rebound in the numbers here, particularly in the Eurozone. Now, week and a half ago, they had some really shocking numbers. You've got the IFO business numbers, business climate, current conditions, expectations, all much higher than forecast, right, out of the Eurozone. Now, the Euro is 58% of the basket, roughly, of the dollar index. Right, so it's anything big that happens on the Eurozone or Euro or Germany is going to have an impact on the dollar. Right, you just got to understand that. But not only that, so if you just come back, like to the end of last week, we've had some really strong UK data. There was also stronger composite PMI data out of Germany and the Eurozone. So we've had like two really big days of constant strong data out of those countries. Plus, we've got the vaccine euphoria in the UK. It's also hitting Australia. So all those pairs are really popping on the fact that the dollar is actually just falling because we're seeing a rebound in Europe and Australasia, right? So with the economic numbers, and that's a real big thing. So when you come back and look at the pairs, we've had a significant move here on a lot of these pairs. Euro battled to get through that. I was going to say it was going to take something really weak in the dollar or something really positive in Europe to get the euro up, because it did have that sort of fundamental backdrop of weak data. Now that hasn't gone away, but we've just had some data which suggests things aren't looking so bad from here. And you can see this sort of like double week level support breakdown in the dollar index. It's just sort of sitting here in limbo, as is dollar Swiss. And you can see a little bit of a clean out here in, dollar yen. If anything, I've just noticed also, if you just come back over to the main page here, just have a look at the VIX. VIX was sort of pushing down, the volatility index, down under 20, right, last week. Now it's back up to 23, shot up into the mid to high 20s. That tells me that, things aren't all, there's some uncertainty out there. And I would suggest this is where the yen is now coming back in as a bit of the safe haven. The US dollar is not the safe haven trade at the moment, that's for sure. Now, dollar CAD, oil's at $61. This thing is now, the price action here is very loose, right? So I don't think you can just jump into dollar CAD and just start trading. I mean, the real resistance level is up towards 127.10. So, you're in the middle of nowhere, no man's land here at the moment. Sterling continues to cruise higher. Aussie's had a massively good run once it broke through 78, the figure, hitting 80, well, not 80 cents, but it's just 79, sort of 20-ish, and also Kiwi. So at the moment, the dollar is not really on its knees, but it is taking a bit of a barrage. And today, this is a real good test because we are seeing those economic numbers come into play. And what we have today is we've got the climate count change, the employment numbers out of the UK. Now, there's four or five variables here that you need to factor in, so I'd be careful to rush in. You've also got some Eurozone inflation numbers, some final inflation numbers there as well. So make sure you have a look at this as we go through the day. The Case-Shiller numbers could be quite interesting as well as US consumer confidence. So this is, I think it's almost one of those days where we're looking for confirmation that the strong economic outlook in Europe is pushing the dollar down. And that's where I'm, going to be looking today for, confirmation there. All the UK data has been quite good. You'd expect their consumer confidence numbers and everything else to be off the charts as they roll out the vaccines at this point. So keep an eye on the UK data and also the final inflation numbers out of Europe. That's where my eyes will be focusing at this point. And that's all she wrote for the moment, because all you can do is plan around what's coming out fundamentally. As far as US stimulus packages and these sorts of things are mentioned, they're just in the pipeline. And what you end up getting is this toing and froing effect of the dollar just going up and down on various US numbers. But you know what? The other numbers are now starting to come into play and really impact. And that's where the dollar no longer has control over its own destiny. It's the other pairs that are pushing it around. So you got to understand how this cycle is going to go. Every week for the last month, sterling's soaring on the back of a vaccine rollout, right? So, and what that does for economic growth, etc. So just try and work in where is some pressure points. Well, I'll tell you what, if there's a big problem with the vaccine rollout in the UK and everyone starts dropping over, well, sterling's going to drop like 20 cents because it's gone up 10 or 15 on the back of this. So we'll have to see how that goes. Outside of that, guys, you can't do much else except for watch the market, analyze for the technicals for the best levels, and then try and work out where direction's coming from and which pairs are the best ones to be hitting. Okay, so whether you're looking at the just general relative strength of the majors here, or you're coming through just trying to work out the correlations between the various instruments from the safe havens, the risk on, risk off pairs, might even be even easier for the traders with Metastock. Come back to the correlation matrix, line up, see what's impacting what. And mine's just stalling there at the moment. So then you can really isolate what's correlating with what. Like the equity markets don't seem to be correlating with any of the currencies at the moment, but there might be some diamonds in the rough if we can get that up. All right, guys, that's it from me. Pretty interesting day to start the week. US equities hammered and no connection there with the risk on, risk off sentiment. Identify that. The economic data is in play. So let's keep a focus on that for sure. All right, guys, have a good one. Cheerio.